Hey, this is Justin with DayTradeTheMarkets.com. End of day on Friday the 17th. I just wanted to kind of show, I'm in the midst of a long trade here, small trade here at the end of the day in the YM. Just wanted to kind of go through the logic of it and show you some of the thinking on this. Basically, let me roll this back a little bit, but just to give you an idea, I'm long from '05. I just did it with 5 contracts. I'm out of 2 of them. I've still got 3 of them to go, and I'm just going to try to hold this as long as possible toward the end of the day here. But heading into this trade, this level here, this blue line right there, was the high we've had over the past couple of days, and we tested that a few times earlier in the day and just didn't get any real aggression there. And then we got some right there on this bar, and at that time I was looking to play that in the ES, and I just missed my entry long. I had a limit order and I missed it long by a tick or two, so I just didn't get on board. And I typically don't, I try not to chase, but that's just what happened. But then a little while later, a little after 3 o'clock or so Eastern time, we got another sequence of what we call two extreme. These dark blue are what we call level 3 or extreme buying aggression bars. And obviously heading into today, we're all-time highs here. The bigger picture bias is up. We're looking for any kind of reason we can to get long. And so whenever you get these level 3 bars, that's telling you there's some extreme buying coming into the market, and you can follow that. One way to do that is what we call the retracement trade, where you just buy in a tick or two above the low of each of these bars. Another one of the setups that we like to use is, this is what I call the sweet spot, where we've got 2 of these level 3 bars overlapping. And in this case right here, you can see this is basically the spot they overlap if you look at those 2 bars. Okay, so in that area right in there, we know that's going to be a pretty good area of resistance. And then when we had this level 3 selling bar that came in and then decelerated on the very next bar, that to me, that's a very good sign, because sometimes you'll get a pretty strong wave of selling, and if it can get rejected, especially in the context of the bigger picture, that's just a really good entry. In other words, it's like the idea of extreme selling coming in that's capitulation, because it's just a buying opportunity. So as soon as that deceleration came in there, I actually entered a limit order at 305, happened to get filled on one of these bars, so kind of lucky. I would have chased it up a little bit, but once we saw the rejection of the level 3 selling bar and that deceleration, I mean, to me, that's telling me this is, number one, as a really good spot to be a buyer anyway. Rejection of a selling move is more evidence. Filter strong, that's obviously more evidence. The bigger picture bias is up. That's more evidence. I mean, there's a lot of good reasons to be looking to get long there. And so I scaled out of 2/5 of it right here at the high of the day. And now I'm just, at this point, the only reason I'm going to get out is if I actually see some selling evidence come into the market. In fact, let me just move this a little bit higher, just basically out of the way. If I see some selling evidence come into the market, like a level 2 or a level 3 selling bar that actually comes into the market, and then we have a full bar below it, then I'll get out of this position. But I'm hoping that I'm able to hold this until the end of the day. We'll just have to kind of wait and see. At this point, what I can do is, so I've got I'll just put my stop here at my entry price. Although I'm not, I could trail it up right below a level 3 bar there. I could put it under this level 1 selling bar. It's the first sign of any minor selling. Level 1s I don't really pay much attention to. I'm going to just let that wiggle out. I'm not going to get out of this. I mean, worst case is I have a small profit on the first 2/5 of my position, and I have a break even on my final 3/5 of the position. That's my worst case. More than likely, this thing's going to either head higher, or some kind of strong selling reaction will come in, and then I'll know that I can get out of that for a decent profit. But all things equal, this is kind of, if you saw that video I did the other day on exit strategy, this is what I'd call a level, a 5 situation, where it's extremely, my read on the market is extremely bullish. I mean, it doesn't take a genius to know that at this point. And so I'm looking for my thought process on that is if I'm long when I think the market's extremely bullish and there's really no reason to get out, then I'm only going to get out if the market proves to me or forces me to get out. In other words, I'm only going to get out when I see selling come in. Okay, otherwise I'm just going to hold it through any of the wiggles. Okay, now if I was in a situation where I was more neutral on the market, or I was maybe swimming upstream a little bit, then I would take the opposite approach where I would say I need to make the market prove to me that I need to stay in. In other words, I'm looking for a reason to get out if the market's a little bit neutral or against me, and make the market prove to me that I should stay in. In this case, where all signs are bullish and I really like the position that I'm in, I want to make the market only get out and make the market prove to me that I should get out. In other words, make it prove to me that I should get out before I do anything. Okay, so hopefully that makes sense. And if you click on the video page, you can see you can see that exit video that I did the other day if you didn't see that. So what I can do now is just go ahead and pause this video, and just when something happens, I'll bring it back up. All right. All right. It's a few minutes later. Nothing really important has happened to this point. The market's sold off. It's just kind of wiggling downwards a little bit. And so could I, lock in some profit right now? At this point, there's a possible chance on 60% of my position, even though it's a small position. You still want to make as much as you can. On 60% of my position, I could just have a break even. And a lot of people would say, hey, you got to lock in some of the profit, and I can understand that logic, and there's nothing wrong with that logic at all. However, just to reiterate kind of the thought process that I like to use in this case, at this point, the reason I got in, which was the two back-to-back level 3 bars, rejection of that area, which is what we know is a good area to begin with, and then rejection of that area in a big picture up market, in a short term up market, everything's bullish. Nothing's changed at this point. We've had some level 1 buys that have come in. I'm not going to let myself get shaken out because of that. And I understand the trade-off. I have assessed this as a situation where I think the market's extremely bullish, and I am, doesn't mean it's going to happen, but my hope is that I can get a home run trade here. I can get a real big winner. In order to get a really big winner, you have to be willing to let the market do a little bit of a dance. If you're not comfortable with going for bigger winners and you just like to lock in smaller profits, that's absolutely fine too. And in different market conditions, I would be happy to lock in a smaller profit. But what I've assessed, or my decision making, and I understand the trade-off, is that I'm willing to take a small profit in this case with the understanding or the trade-off that I think there's a potential for a really nice trade here. Okay, doesn't mean that it's going to happen, but I'm willing to accept that trade-off. Okay, so I just wanted to reiterate that thought process. It doesn't mean that I'm right. It doesn't mean that if someone were to lock in a profit there, to protect it, that they're wrong. It doesn't mean that at all. I just want to explain that, basically everything in trading is a trade-off between, the opportunity that you see and how you want to manage the risk to do that. And I think that this software does a really great job of helping you manage trades. The way I look at this, just to go on a little bit of a rant here, I look at trading as kind of a 4-part, game. Number one, or job one, is avoid being on the wrong side of the market. So I think if you just follow along with especially these level 3 buying and selling bars, I think you can do a very good job of avoiding being on the wrong side. Okay, so that's job one. And if you can just do that better, you're going to have better results. Job two is then to get into good, low risk, high reward trade opportunities. I think you can use this software as well to do that. But you don't have to use this software as a standalone like I do. You can use this as a supplement to what you're already doing, and that's some of the best traders that we have that are using this are doing exactly that. They have a method, and they're simply using this to help stay on the right side of the market, to help define or confirm what they're seeing, with actual evidence that's under the surface, or order flow type evidence. The third step, in my opinion, is to maximize your gain on winning trades, and I think that's where this software is a really nice addition to that, because I think you can look at this like I was saying earlier, and you can either use these paint bars as a trailing stop mechanism. So in other words, I could, since I have a buying level 2 bar there, I could bring my stop in a few ticks below the low of that. Okay, that's a pretty good way of using a trailing stop. You can also use it to only get out if you see the other side coming in. That's the way I've chosen to manage this trade. Okay, so here's the level 2 selling bar. Okay, if I can see a full bar come in below the low of this bar, then I'm going to get out of this trade. Okay, that's what I mean. There is actually some selling evidence here that's coming in. Now, is there follow through or is there rejection? Will the market continue lower? I want to give it some time, or will it reject and go higher? This is an attempted move by sellers here, whether it's profit taking, whether it's somebody trying to pick the highs of the day, whatever. It's some aggressive selling coming into the market. If that gets rejected, we're going to have another reaction higher, and those people that are short are going to have to bail and accept their beating, and it's going to go higher. If it comes in, then I'll say, okay, there is some selling, or it hasn't been able to move any higher or attract new buying, and I'm willing to get out for a decent profit. So that's the thought process on that. So we're starting to see the beginning of some selling, but if this can attract more selling, then I'll get out. It's showing me evidence that my position is no longer outstanding. But if this thing doesn't attract any more selling and it goes and makes new highs, we're going to have another nice run higher, and I'd like to participate in that. So I'm not going to panic here. If I see some follow through, I'll get out. If not, then so be it. All right, so I'll pause this and come back in a minute or two if something new develops. Actually, after another minute, what I'm going to do is I'm just going to bring this stop up to 315, because at that point, if this hits 315, it will have most certainly put more than a full bar below the low of that level 2 selling bar. It will also have taken out the low of this level 2 buying bar, which all things equal we would expect to provide a little bit of support. So at this point, that will have shown me that selling is coming into the market, and I'll be willing to get out at that point. But you can see we have a little bit of evidence that some selling's coming in. I still don't want to just bail, because I want to see it kind of prove itself even more. I want to give this long every opportunity to move higher and perhaps close on its highs. But if this is the place where some selling is coming in, or some profit taking before the weekend is coming in, then I want to at least lock something in. So hopefully that makes sense. But I'm not just doing it on emotion. I'm not just doing it on fear of missing out. I'm doing it based on there's actually some evidence that's showing some selling's coming in, and if that stop is hit, it will have proven that selling was at least legitimate in the very short term. So hopefully that makes sense. I'll pause it again. Okay, and it's looking like this selling is going to be somewhat legitimate. We have another level 2 buying bar in there. I could get out right now, make another 2-3 ticks. That's fine. I'm just going to leave it here. If this thing gets rejected right away, we could have another run higher. But if it comes down another few ticks, then I'll get stopped out. But I'm content with leaving the stop here. I've got a nice little trade here if it works out. But maybe this thing can reject the selling here and move higher. If so, great. If not, then I've managed my risk at this point. So we'll see. But at least I've made the decision, or I went into the trade with the decision that I'm holding this as long as possible until the market proves that I should get out. And if I get stopped out here, I consider that will have been the case, that selling has come in, and it's shown me that I have at least reason to get out. So hopefully that makes sense. I'll go ahead and just pause this. It's getting a bit long, and come back in a moment. Okay, and my stop was just filled, so that's okay. Again, I got in here at 05. Let's just recap this here. Got in at 05, got a great fill. The reasoning I explained earlier. In terms of risk, this is, I think, what you're looking for. The reasoning for getting in was this area here, this confluence of 2 level 3 buying bars, obviously in the context of a big picture up market that's pretty strong. So this is an area that should be support. And then when it rejects this level 3 bar, all the better. Wait for a little bit of a limit order. Kind of got lucky on the fill, but that's fine. The risk needs to be somewhere below the low of this level 2 or level 3 buying bar, somewhere here. So really you're only needing to risk 10 ticks or so. So pretty low risk, and the upside is, who knows, as high as can be. It didn't happen to be that way, but ended up getting 10 ticks on those final 3, and I think about the same. I think I got 10 so I got 10 on all 5 contracts. Not a huge trade, nothing to retire on, but a low risk, potentially high return trade late in the day on a Friday. I don't want to risk too much, but it was still a good opportunity. So again, not risk much, make a little, with the potential to make a lot. So that it's a good setup to me. So hopefully that makes sense. If you have any questions about that, let us know. Otherwise, have a wonderful weekend, everyone, and we'll talk to you soon.